Hey guys, Steve Ferguson here, your modern mortgage loan advisor based in Texas. I want to talk to you guys about Texas loans and about your credit scores in Texas today. So we're going to go over a lot of different details, how to make sure you're set up for success, give you all the ins and outs of what kind of credit you need to have and how to boost your scores and everything that you need to know about buying a home in Texas and how your credit affects doing that. But before we get started, please make sure to like or subscribe to my channel in this video. Make sure you post comments, ask questions, share this with your friends and family. I love that. I love having that conversation. And anywhere that you are in the state of Texas, I can help you from a lender standpoint. I want to make sure that you guys are educated on what you're getting and how you're doing it and make sure you got the right loan. So again, thank you for tuning in. Let's get started. Okay, so for buying a home in Texas, you're worried about your credit score. Let's start from the basics. So the very first thing is, the credit scores lenders actually use to approve you in Texas. I've got a list over here I'm reading. I don't want to miss anything for you. So here's the deal. There's several different scoring models that exist out there on the market. What a mortgage lender uses is what's called an RMCR, which is a residential mortgage credit report. What you get like in the mail from your credit cards or from Credit Karma is a different scoring model. That's like a score 8 model, and those credit scores are not going to be accurate compared to what we pull. The general rule of thumb is if you're using Credit Karma or one of those credit card systems to check your scores will probably be about 30 points higher than your actual credit scores truly are. So for our purposes from a mortgage perspective, we're going to pull a tri-merge, which means all three bureaus, TransUnion, Experian, and Equifax, and we're going to use the middle score numerically to qualify you. So if you have a 578, a 592, and a 570, we're going to use the 578 score for qualifying purposes. So that's the general idea on how the credit reporting works. There are different scoring models. Keep in mind, lenders that are doing home loans and car loans are using RMCRs, and it's important to understand that there is a difference in your credit score between what we pull and what other programs allow you to get. So how quickly lower credit card balances change your scores? So when you're looking at your credit in general, there's a couple different factors that impact your ability to boost your scores in a short amount of time. One of the biggest factors is revolving credit. So revolving credit is any credit card that you have. If you've got that MasterCard or Visa or whoever it happens to be, and it's got the little logo, chances are it reports on your credit report. And there's a formula that credit reporting agencies use in order to determine risk on your credit report. The higher risk you have, the lower your credit scores are going to be. So reducing risk means reducing your balances on those credit cards. So if you owe more than half of your limit on a credit card, then you are generally going to have a decreased interest rate. So I'll give you an example. Your credit limit's $3,000 on your credit card, and you owe $1,700 on the card, you're negatively impacting your credit scores. However, if you owe less than a third of the limit on your card, so once again, a $3,000 limit, and you owe less than $1,000, you're going to positively increase your credit scores. So there's lots of different ways to do that. For example, let's say you've got a credit card sitting over here that has a very low balance and a high limit. You could transfer balances from one card to the other card, get both of them below a third of the limit and boost your credit scores and it not cost you a dime. You can also call your your credit card companies and ask for a limit increase. So, for example, you owe $1,500 on a $3,000 card. If you can get them to increase the limit to $5,000, all of a sudden you're probably going to see a boost to your credit scores because your balance is lower compared to your limit. So there's some great ways to get to where you want to go in a short amount of time without costing a lot of money. A couple of little secrets there I hope you guys got taken care of and things that you can do today. Now, let's talk about late payments on your credit. How do we fix late payments on your credit? All right, there is a strategy to this. So if your lates are true and correct, like it truly happened, there's not a whole lot that you can do. However, if they're old, if they're maybe not correct, if there's some gray area, you can always call them and ask for an update on your credit to remove those late payments. Your creditor has the ability to update your credit. So if you've been a fantastic client for 20 years and never missed a payment and there was an error and there was one time 30 on your credit, it is possible that you could contact your creditor and say, hey, look, I've been a great payee all these times. Can you please remove this late payment? It does happen. Not often, but it does happen. It is something that you can argue and you can see if that creditor is nice enough to do that for you. So that's one way. Second way is proof, right? If we can prove that, your credit payment was less than 30 days late and that you paid it at day 26 and there was an error, those things are easy to get updated and removed, and your mortgage lender, aka me, can do that for you on your behalf on our side as long as we can prove it beyond a shadow of a doubt. We do have to provide all the documentation to make sure that the credit bureaus know what they need to do. So it's important to make sure that you go through your credit report, verify what's right, make sure that you check the things that are showing derogatory, make sure that they're accurate, because if they're not, we want to change those things. More credit reports have inaccuracies on them than they have accuracies, and so are accurate information. So just keep that in mind. There's always something we can work with. So how do we remove incorrect items from your credit report? Let's talk about that, since we've already discussed some of these things that can be inaccurate. On our side, what we can do as a mortgage lender for you guys is if we can get documentation of these inaccurate items, we send in that documentation to the credit bureaus and we do what's called a rapid rescore, which means we say, hey, Mr. Credit Bureau, we have this documentation, this documentation. They're going to call you most likely. They're going to call the creditor. They're going to put you on a three-way call. They're going to confirm that data. Then they're going to update that credit report for us. And that way it's as if it never happened. So you may see a score increase of 20 to 100 points, depending on what the item is. So we can fix all those things for you on your behalf as long as we can document them from beginning to end. So keep that in mind. It's going to be important. You want to work with somebody who's going to make sure that they have your best interests in mind when it comes to taking care of your credit. Now, what do you not do before applying for a mortgage loan? And again, guys, I keep going back to my list. I don't want to miss anything. All right. When you're applying for a mortgage loan, it's really important to keep a couple things in mind. Do not shop all kinds of locations for a mortgage loan. I know that you legally have the ability to do it. Not an issue. But what happens is when you pull your credit a whole lot of times, I'm going to give you the rule, and I'm going to tell you what generally happens. The rule states that you can pull your credit as many times as you would like for a car loan or a mortgage loan for 30 days. And all of those times you pull your credit, those are called inquiries. They only hit your score one time. From 30 to 45 days, 10 inquiries count as one. So it starts hitting your scores more. And then from 45 days on, like let's say you shopped really heavy for a mortgage loan 2 months ago, all those inquiries are now hitting your credit report, and each inquiry is generally worth about 3 points on your credit score. So if you pulled your credit 10 times, guess what? Your score is now probably 30 points lower. Plus, from a lending perspective, we can see all those inquiries and we're like, what's going on? Why do you keep shopping around? Have you not found what you're looking for? Are you just trying to find somebody to say yes to you? So it creates red flags, and we have to explain all those inquiries anyway, so it creates more paperwork on your side. So find somebody you trust. Find somebody reputable. Pull 1 or 2 credit reports. If you really want to shop around more than that, tell them your score and say, hey, my score is this. What can you do? Some lenders will give you information over the phone and some will not. But I just caution you that there's lots of ways to spend this. Be careful how many times you pull your credit. It will impact your credit score the more that you shop. So it's unfortunate. I know it's frustrating. It just is what it is. So, and we can also pull what's called a soft pull or a hard credit pull. So a soft credit pull does not affect your credit scores, whereas a hard credit pull will. So those are obviously options that we can use as a lender to make sure that we don't damage your credit as you're shopping for a home loan. All right. So the big mistakes that drop your score right before closing. Let's just say you're under contract, everything is going great, and you decide you want to buy furniture. You want to buy a new car. You want to do a credit consolidation loan. Anytime you pull new credit, we're in the middle of a mortgage loan. Number one, we're going to know. Number two, it's going to negatively impact your scores. Number three, if you open a debt in the middle of your mortgage loan, we have to count that new payment against you, which could prevent you from qualifying for the mortgage loan. I can't tell you how many times I've heard stories, I've seen situations, I've talked to clients, we've educated people, and they go buy things before they've even closed on their home, and now they can no longer qualify for the mortgage. Imagine buying that brand new car right before you close on your mortgage loan, and you can't qualify for the mortgage. I really hope you like your new car because now you have nowhere to put it, or the furniture, or whatever it happens to be. So do not do that. Do not go out and apply for mortgages. Do not miss payments, especially in the mortgage process. If you miss any of your payments, it's going to drop your score substantially. We have to update your credit when you do those things. We're going to see those late payments. It's not like you can hide it from your lender. We're going to find out all that detailed information. And the last thing I want to do is see you guys in a distressful situation because you missed that $25 small monthly payment on a credit card. So Stay up to date on all your payments. Same thing for collections. If you get a notice of collection in the mail that they're about to report to your credit, make sure you handle that before it ever hits your credit report, because once it hits your credit, you'll see a substantial score drop. You may not be able to qualify again for your mortgage, or your interest rate may be substantially higher because your scores are lower. Your product that you thought you were going to get can no longer be qualified for due to credit scores, and it is much faster to lower your credit scores than it is to increase your credit scores. Increasing scores takes a long time. You can destroy your credit in about 30 days, but building it back and bringing it back to where it was takes months, if not years, to get done. So don't miss those payments. Make sure you're set up for success when you're going to get that mortgage loan. All right. Now, what happens if you have no credit? How do we build some credit there? So here's the deal. It's really straightforward. Number one, you can get a prepaid or a secured credit card. Several banks out here offer those types of things. All the major players, all the major banks will offer you a secured card or a prepaid credit card. So what you do is you go into those banks and say, hey, I want to get a secured card. I want to make sure it reports to the credit bureaus. What do you have? And normally what they'll do is they'll give you a credit card with usually about a $300 limit. And they'll say, hey, give us the $300. You're going to pay for that credit card in advance. We're going to give you the card. And then as you use that card for gas or whatever, we take your $300 and we pay that towards the card. Other options is they'll give you a card with a $300 limit, not take the money from you, and then they will, obviously send you a bill when that credit is due. But you want to make sure that those cards are reporting to the credit bureaus, and otherwise you're wasting your time getting that credit. It will not do you any good, and it will not generate any scores. It also is important to ask them which credit bureaus they report to. Do you report to all three, TransUnion, Experian, and Equifax, or you just report to one? You want all three if possible, because that helps boost all three of your credit scores. So that's an easy way to generate credit. Another really easy way is to get added as an authorized user on credit cards for a family member. Now, don't get added to an account that is derogatory or very new, or the balance is super high, because it's going to negatively impact you in your credit scores. You want to get added to an account that's been in existence for 5-10 years. The balance is always low. It's always paid on time, because that will give you credit scores. So for you parents out there, if you're wanting to establish credit for your kids, then add them as authorized users on a couple of your credit cards you've had forever and that you do really well in the balances. And that will give them a credit score, give them longevity on their credit history, and set them up for success. So that way you don't have to co-sign for everything they're wanting to buy. They'll be able to qualify on their own as time goes on. So a couple different ways that you can build credit even if you don't have anything. The last item I want to talk to you guys about today is the exact credit scores that you need to qualify for different loan programs. So every lender is going to give you a different idea on this and a different subject on this, but I kind of want to give you the basics of it. So number one, if you're a veteran, there is no minimum credit score to qualify for a home loan. VA does have even a no score program, but there is no minimum credit score. However, most lenders require above a 500 credit score to qualify. It is 100% financing, which is awesome. And it's just going to depend on your overall credit. FHA, which is another fantastic semi-first-time home buyer style product, no minimum credit score required. They even have an FHA no score product, but it is more rigorous to get qualified for. But in general, 500 credit score for FHA, that's with a 10% down payment, or a 580 credit score with as low as 3.5% down. So you can tell that these credit score programs do go deep, especially on these different mortgage products. USDA, if you're in a rural area, generally USDA is at a 640 credit score, but you can get a USDA loan as low as a 550 credit score. And then finally, conventional is a 620 credit score. However, there was just a ruling that just came out that Fannie Mae removed some of the credit scoring requirements. So you can go lower than a 620 credit score to qualify for conventional loans today. All that being said, it's my job as your loan officer to make sure that you're set up for success, to explain the programs to you, to coach you through building your credit scores, and to get you to a point where you're going to be able to qualify for the home that you want to buy. So I hope this video was good, and it explained a lot of information. It gave you the ammunition you need to make great decisions. And again, if you're in the state of Texas and you're interested in getting qualified for a home loan, let's talk. My contact information is in the description. You can find me. And I really appreciate you guys tuning in today. Hope you have a great day. Talk to you later. Bye-bye.